So anyhow, everybody, thank you for joining this webinar. This entire webinar is about the gap between closing on one house and buying another, and closing on another house, and how you go homeless. So the intent is to try and reduce stress. So I'll move along here. This webinar is being recorded, and it will be shared on my YouTube channel. So feel free to share it with other people, and also to go back and revisit it. Just a little bit about me. Some of you may already know, some of you may not. So I'll kind of make this a little brief, but I got in the real estate business about almost 30 years ago. So April of this coming year will actually be 30 years, 3 decades in this business. Started out in real estate land development in the state of Tennessee. And the first part of my career was in almost completely in land development. And now the back part of my career is in, we specialize in the active adult communities. I was born in Okinawa. I am a military brat. Once a military brat, always a military brat. I am a North Carolinian. I did attend NC State, and I do bleed red, not because it's my blood, but because I am an NC State Wolfpack fan. I am the owner of Creekmore Realty Group. I run my business on the platform called EXP. And I've been a partner agent with 55 places since 2013, and been Platinum Club with them at least 7 times. Icon 4 times. Just simply means I've helped a lot of people purchase property. Cindy and I have 5 grandchildren. They call me G-Paw. She's Gigi. And my brother and I are hiking on the Appalachian Trail. We hope to complete it by 2027. 2027. So we do specialize in all the active adult communities in the Brunswick County area, and also north of Wilmington. So don't want to dig too much into that, but that is what we do. If you've not been on my new website, retired2nc.com, I do hope you'll log on at some point in time. There's a lot of information on there about communities in this area. So the purpose of this discussion, and everybody's mic is open if you want it to be open. You can leave it muted, that's fine too. But the purpose of this discussion is to talk about how do you navigate the purchase of one home and seamlessly move into another home. So just the general path is you decide you're going to sell your home, you prepare to sell your home, you find a agent to help represent you in selling your home. Then you get your property under contract, but before that, need to have a thought process and discussion with your realtor from where you're living, and the realtor that's going to help you where you're going, to, if there is a gap, a time frame between when you close on the home you live in and close on the home that you're going to move into, how do you plan for that gap? So that's what this main discussion is about that. And we've got 5 strategies that we're going to discuss. Then certainly you close on your current home, then you put under contract your new home and move into your new home. So this is the general path. Certainly there are many different ways to get to the end result, but that's the general path. So again, what we're going to talk about today is the gap, and how do we minimize the stress related to that gap hopefully no stress. But the gap is the period of time between closing the current house that you're living in and moving into the new home. So that can be fairly stressful if you don't know where you're going to go and don't have a plan in place. So this whole webinar is to help you make that plan. So just in general, when you're selling real estate, there's three different ways that you pay for it. You pay for it with the sale of your current home, or you've got funds from 401k. You've already sold your home, you're renting, but you don't need to sell the home that you're currently in, or you get a loan to purchase the new property. So a for sale contingency has four general plans on how you plan for that gap, either a leaseback or a delayed closing or a simultaneous closing, or temporary housing. If you don't need to sell the house or sell property wherever you're living, and you can make a direct move, certainly that's the easiest path. But sometimes a leaseback to the seller of the property is a bargaining chip, and also somewhat of an advantage for you as the buyer. So we'll talk about that as well. And then your strategies on paying for the home with a loan could be a bridge loan, which is becoming more popular. Certainly a conventional loan. A HELOC is a home equity line of conversion. Leaseback is not how you pay for the home, but it's a strategy to reduce the gap, the time frame between moving out of the current home and getting into the new home. And then simultaneous closing, again, is a strategy, not how you pay for the property. So the challenge is managing two transactions. Sometimes there's not two transactions, there's only one. But if you have two transactions, closing on the house that you're living in and closing on the new house, that can be stressful. So these strategies that we're going to talk about are to help you plan, get some thought process going. How am I going to reduce that gap without pulling your hair out? So we are here to try and help you navigate through this process as easily as possible. So domino effect. So I don't know if anybody is able to or knows where your hand raise thing is, but we've got a little hand raise thing that's on the bottom of your screen. If you navigate over your the toolbar, if you will, for the Zoom call. If you know what I'm talking about with the domino effect, and if you can find the raise your hand. Your mics are open. You can let me know that too. But the domino effect is in real estate refers to a chain reaction triggered when one transaction is dependent upon another. It is especially common in scenarios where a buyer needs to sell their current home to fund the purchase of a new home. So a lot of times I will be working with a client, and the client will say, we're gonna buy this house, and I'm selling my house, and the person who's buying my house is going to pay cash. Okay, so the question is, whenever I hear cash, is where is the cash coming from? So the cash most often is coming from the sale of another house. Not always, but it often is. So anytime the cash or the funds comes from the sale of another house, that potentially puts you in a domino effect. So I have been a part of transactions where there's 4 dominoes that had to fall in order for my client to finally get into their home. So we want to talk about the domino and how it comes into play and how we reduce that gap when a domino effect is in place. So here's some strategies that we're going to talk about. And some of them pertain to how you pay for it, and some of them pertain to reducing the gap in that time frame. So during COVID, for sale contingencies were no, don't even stop. You're even going to offer that? No, I've got another buyer. Well, that's not the case right now. So now for sale contingencies are accepted in general, but a contingency clause makes the purchase of your home dependent on the sale of your current home. And the advantage of that is so that you can ensure that you don't end up owning two homes at the same time, or paying a mortgage on two homes at the same time. However, a for sale contingency does add complexity and creates dependencies on the transactions, which can make delays or complications when you have a ripple through the chain. So if you need to sell your house in order to purchase the other house, and that's the path, we are taking that path, which is fine. Some steps that you can take to ensure that your home would be or your contract would be accepted would be to, you may identify what you're going to buy, but wait till you put it under contract until your current home is past some level of inspections, such that the seller of the home you want to buy feels reasonably confident that there's not going to be a hitch or a ripple in your transaction. So we want to provide the seller of the home that you want to buy a preponderance of evidence. It could be your current contract. It could be inspection report on your house and that you've corrected all the inspection items. It could be comps. It could definitely be the real estate agent that is representing the buyer of your home, such that we can communicate with your current agent down here or here where we're at with the agent representing the buyer of your home, so that everybody feels reasonably comfortable and that your agent here can convey that to the seller. The other is a backup plan. So because contingencies are not overwhelmingly, oh my goodness, I'm so happy you're bringing me a contingency contract. So a backup plan could be pre-approved for a bridge loan or get pre-approved for a loan, such that if there is a hitch in the sale of your house, you could potentially exercise your backup plan being another loan. So again, we're talking about getting the thought process going to plan for that gap. If a for sale contingency is a strategy for paying for the property. So a bridge loan. There was a while that bridge loans were not even offered, but that's not the case right now. And we have several lenders that we work with here that provide in their portfolio a bridge loan. Now, is the interest on a bridge loan higher? Can be. Are there more limitations on using a bridge loan? Yes. But the advantage of using a bridge loan is if we've identified a house that this is it, this is the dream house. I do not want to let this house go by. I have not even put my house on the market yet. and but I want to be able to exercise my option to purchase this house. Then a bridge loan could be an excellent option to securing the new home. Now, we have several lenders as it pertains to the interest rate. One of the lenders that we work with has a 4-month limitation. You've got to get the new house closed within 4 months. And if you use that lender, then actually they waive the interest rates that you would have paid for that 4 months. So some really good options with some lenders that we have. But again, the advantage of the bridge loan is there's a property, you don't want to let it get by. You've not sold your property yet, and you want to exercise the option to purchase that property. So you use the equity in the current home to buy before you sell. Once you sell your property, you can drop or once you get the bridge loan, you can drop the contingency if you had a contingency in your initial offer. So exercising bridge loan as your backup plan. You can use the bridge proceeds to cover your down payment and your closing costs. Got a typo. Sorry, guys. Closing costs and escrows. And you can also drop the bridge loan if you end up selling your home prior to closing on the new home. So if bridge loans are something you want to learn more about, again, we've got several lenders, but know that it is a strategy to identify and close on the new home prior to selling the existing home that you're living in. Leaseback agreement. Okay, so this leaseback agreement that I just closed 2 weeks ago was the main reason I thought that I needed to put this little webinar together to help people understand how it functions and how it can greatly reduce stress in that gap time frame. So a leaseback is a negotiated leaseback agreement with the buyer of your current home. This allows you to stay with the buyer of your current home, and it allows you to stay in your home for a specified period of time after the sale, giving you time to close on the new home. So basically, you sell your home to your new buyer, and then you lease the home back to the buyer of your home, or you are the leasee. So we'll get a little bit more in depth on this, but Jim, yes, a bridge loan is an excellent solution for new construction. And in fact, you'll see when I go to the next slide that it is definitely a great option for new construction. So when you're doing a leaseback, what's generally acceptable in amount? I've seen leaseback amounts $2,000 a month. I've seen leasebacks $1,500 a month. I've seen leasebacks in a lump sum of $10,000 that may be a 3-month period of time. So it depends on every scenario, but these are things that are generally looked at. Length of time, typically a leaseback, if it goes more than 4 months, then that needs to be an entirely different lease rather than just a general leaseback. Although builders do offer it to buyers of their property. Generally, the owner of the property will pay for the insurance of the property, but the resident will pay for the utilities and the maintenance on the property. So a little bit more depth on a leaseback. So let's talk about some scenarios of where a leaseback could come into play. So you're the seller, but you're not quite ready to move. And and you have a buyer of your home, and your buyer is not pressing to get into your house. And let's say you negotiate with your buyer of your home. I've got a house under construction, and the house will not be completed for 2 months. Go ahead and buy my house with the condition that I can stay in the house until my house is completed. So the black arrow is indicating you are leasing back from buyer one of your property, and you are paying buyer one whatever that amount of money is. The scenario that I just closed on 2 weeks ago was most definitely a tricky closing, because the seller of my client, who was buying property here, needed the proceeds to purchase the new home. And the new home, the person that was selling the new home also needed the proceeds to buy the home that they were moving into. So we were in a domino, but we were also in a situation where buyer three could not move forward without the money. So buyer three said, I will sell you my house, but only if you will close on my house. Let me stay in the house for 2 weeks until I can close on the new house and move into the new house. So my client didn't want to be homeless during that time frame, but also did not want to lose that house. So what we negotiated, I had her call me, or I had her give me her real estate agent up in New Jersey, is where they were. And so I said, what we need to do is mirror the same lease back that my client, which is actually her client too, mirror the same lease back for the seller of the home she wants to buy, and she grant that same or negotiate that same lease back with the person that was buying their home, such that there was a 2-week gap between closing on the houses, such that everybody could stay in their house, and nobody went homeless. So I'm going to show you another slide in a second, but just the third scenario is the seller needs more time to find a house, and you're not in a hurry to get into that house. So you let the seller of the house you want to buy lease back, pay you rent, and then they can move into that home. So the way it worked out with the Lebranos, again, everybody needed the proceeds to move forward, with the exception of the buyer of my client, the Lebranos. So we had a closing date on their house on a Monday. So now my client had their funds. Then we closed on the house that they wanted to buy on a Wednesday. And then, so now seller number 3 now has their money so that they could go forward and close on the house that they were going to buy. So, and then they also needed to pack and move and everything that they needed to do. So seller 3 leased back from my client, who was seller 2, for roughly a 2-week time frame, and my client, seller 2, leased back from seller or buyer 1 for 2 weeks and a day, 2 weeks and 2 days, such that everybody had their funds, everybody could stay in their house and then move simultaneously into the home as proceeds were distributed and able to close. It's tricky. We have navigated this scenario many, many times. So if it comes into that situation, certainly we can help you with that. But a lease back is a scenario to utilize to bridge that gap. And you could use the lease back also on new construction, whereas you're not ready to move into the new house. The new construction builder wants to use it as a model, and they will pay you as the new owner typically 6 months, sometimes a year. Will lease back from you. They'll stage it, put nice furniture in there, make it real pretty, and then use it as a showcase. So lease backs are very, very popular also with a new construction if you can identify the builder that's offering a lease back. So sometimes you got to be very proactive to get that, but they are available. Certainly we can help with that. So simultaneous close can be stressful, but if you prepare for it, and if you in particular have the agents involved with the transaction communicating with each other, that definitely will help smooth the entire transaction. Communication is key, and that's how you really solve some of these issues. Or you could do an extended closing, giving everybody time to vacate one house and into another house. All these things can be navigated, but when agents on one end and agents on the other end are in communication, that definitely improves the outcome and ensures more of a smooth transaction. The option that we want to avoid for you, but sometimes not an option that we can avoid, would be temporary housing. I mean, nobody wants to put their stuff in storage. Nobody wants to live with their son for 3 months, although sometimes push comes to shove, people do that. Sometimes people go on extended vacations, but it is an option. It is something to consider. So I have helped people find places to rent temporarily while they are exiting one house and closing on another house. So we certainly can help you with that. It's the more expensive, really, of all the option, having to pay rent, unless you're staying with a relative, pay rent and putting stuff into storage. So that's one of the last of the 5 strategies. Just wanted to thank everybody for getting on to this webinar. This webinar will be on YouTube, but we as expert realtors in most of our clients are moving from out of state into our state. So bridging that gap is something that we do a whole lot. Timing is important, so we have experience, and we can help you align one transaction with the other transaction. We've got lots of lenders that do certainly bridge loans, FHA loans, VA loans. So we can help you with that. And when it comes to negotiating a lease back or negotiating the timing of a close, we've got lots of experience with that as well. So just in quick recap, your strategies for bridging that gap are could be a lease back, could be a delayed closing, could be temporary housing, could be simultaneous closing, could be a bridge loan. Those are the general strategies to bridging that gap during that time frame. And if I can get my button to work, I'll go right back over to here. Questions? Does anybody have any questions that we can answer? You can either put it into the question, or I'm opening everybody's mic.
It's like Sharon has a question, or is that Nora? No, that's Nora, I guess.
Okay. Nora. Okay. Yeah. Your mic is open, Nora.
Okay. Chris, who's in charge of orchestrating the ballet between the realtor in your current home, the realtor in your future home, and potentially the third one down the line? We're probably going to be in a situation where we're doing new construction, and
Okay.
my gut says that there's probably going to be something along the way that, the builder says we'll be ready by April 1st, and you're really not ready until June 15th.
Okay. So the answer to your question is who orchestrates that? Well, it would be your buyer's agent that is helping you buy that new construction home. So I, of course, have done that a lot. So on new construction, a lot of builders will offer a contingency, or will accept a contingency if it's a spec home from a builder, a production builder, if you will. D.R. Horton entertains it. Lennar entertains it. There's several builders that will entertain it. Now, if you're doing a construction to perm loan, then you would be, paying interest on the construction of the home. But basically, what your agent here would be doing would be helping you with the timing of when you'll put your house on the market. If we know by talking with your agent where you're at that your general days on the market are going to be 45 days, then what I would be monitoring here is, when are we 45 days out from your house being completed, such that I can advise you and advise your agent and where you're at and when to actually pull the trigger and put your house on the market.
Yeah,
Now,
we're in Connecticut, so our days on the market are like 7 or under.
Okay. So
that really cuts it close. I understand that, but I think we could probably negotiate the closing date, and that would solve the problem.
So, if it's new construction, will the builder delay closing? Typically on new construction, a builder will delay closing 2 weeks, maybe 30 days. But well, first, the most important is to try and narrow, what community do I want to be in? What new construction options do I have? Is there many new construction options, or are there few construction options? And get to a point where we know what my 5 best options are in that new construction community, maybe 3 best options, maybe 1 best option, so that we can go ahead and put the new house under contract. And you would need to be probably 30 days out before you put the new property under contract, or meaning put the new property under contract 30 days before you put your property under contract, so that your listing agent has time to stage the house. You have time to purge whatever you need to purge, photographs and those kind of things. But it would require one identifying, community, builder, and what your options are with that builder, and coordinating it with your agent here. Hopefully it's me, with your agent and where you're at.
Great, thank you.
So any other questions? Okay. So excellent. Hey, thank you everyone. I hope this was helpful for you. Again, it'll be on our YouTube channel. If you don't know how to get a hold of us, if you've got your phone handy, you can scan one of those QR codes and that'll get to us. We're on Facebook, Instagram, YouTube, LinkedIn, and our website is retiretonc.com. Or you can also find us at nccoastallivinghomes.com. We're on both, and those websites are connected. So we will let you know. We'll send you an email, let you know when this is posted on our YouTube channel. And if you have questions that you'd like answered one-on-one, certainly feel free to reach out to either myself or anybody that's on my team. John and Karen are on this webinar here tonight, and we'd love to help you. So thank you, everyone, and I hope you have an absolutely fantastic Merry Christmas.
Thank you. You too.
Thank you, Chris.
Thank you.
Thank you.
All right.
Thank you. Bye-bye.